Hey everyone, welcome into the Flippin' Hippos YouTube channel. I'm Star, the Flippin' Hippo. Yesterday we talked about some common tax mistakes that folks are making. And today we're going to talk about some deductions that people are missing out on. Before we begin, a little disclaimer. I am not a licensed CPA, nor am I a professional tax preparer. In fact, I'm not even good at math. I suggest that everyone hires a licensed CPA or an actual tax preparer to answer any and all of your questions on filing your taxes, what deductions you can take, and to help you file. Especially if you're new to reselling, the first couple of years, you should definitely be paying a professional. They can help you file. They can help you find all the deductions that you are allowed, and they will help you avoid any pitfalls or misfilings or doing anything that could trigger an audit. And most of the professionals that will file for you that you hire guarantee their services. And if you are, in fact, audited, they'll take care of that for you as well. And you don't have to deal with the stress of that or anything. They'll take care of all of it for you. And most CPAs, once you've hired them, you can call them if you have questions or something that you need help with. So again, I'm not a professional. Y'all should be hiring a professional. But I did want to talk today about some common deductions that I don't think people know that they're entitled to. So yesterday we talked about the common tax mistakes and people misreporting their income. But you're doing, let's say you're doing everything you're supposed to be doing. You're reporting all your income. You're on the up and up. You're reporting all your cash sales. You're reporting everything that you sell, all the monies that you're making from all your different streams of income. But you're paying a lot in taxes because maybe you don't know about some of these deductions that you're entitled to. So I'm going to talk about some of these, but again, I am not a professional. So before you go to take any of these deductions, consult a CPA or a tax preparer and make sure that you, in fact, are entitled to these deductions. So the most common ones that I know everyone knows to claim, I hope, are your cost of goods. Everyone knows you can claim the money you spend on items that you intend to resell. That's your cost of goods. Most folks know you can claim your mileage. Most folks know you can claim your travel, your food, and your lodging. It's within X amount of miles of your home, and I'm not quite sure what it is anymore because it did change. It used to be like 100 miles. I'm not sure what it is, so you'll want to check on that. But you have to be X amount far away from home, and you can claim the travel, the food, the lodging. You cannot claim alcohol, but you can claim some forms of entertainment. You used to be able to claim a home office. You cannot do that anymore. I don't know if they replaced it. Like if you use half of your house for storage, I don't know if you can claim that anymore or not. You used to be able to claim a certain percentage of your home if you used it strictly for business. So check on that. I know they took away the home office, but check and see if they replaced it with anything else. And of course, any fees that you're paying eBay, Poshmark, any subscription fees to places to sell on their platforms, you know you can claim those. But some little known deductions that I don't think people think about when they go to file is donations. If you're donating anything to the thrift stores, you're entitled to a write-off, whether it's for your personal taxes or your business. If you donate to a thrift store, you can absolutely ask them for a tax paper. I know Goodwill provides them. I'm not on the up and up with other thrift stores, but I know the Goodwill will provide one if you ask for it. Usually they ask me if I want it, and I don't even have to ask for it. And it's just a piece of paper that's a professional, has the Goodwill logo on it, and it says, I donated goods that were worth this amount. And then you put that with your paperwork and you can claim it at tax time, but keep it with your paperwork, keep it with your receipts and all that. In case of an audit, you have that proof. The next thing is the defects. Now, this is one you'll definitely want to check with your CPA before you do it, because technically, if you have a defect that you throw away, you've probably already claimed it on cost of goods. So what I mean by that is you go to the Goodwill, you buy 100 pairs of jeans for $200. You're going to claim that $200 for those jeans, $2 a piece, as cost of goods. But let's say 5 of them, you get them home and you discover they are just not sellable. They're ripped, they're torn, they're stained, and they're not even good enough to redonate, so you throw them away. I want to say that you can claim that as a write-off because you threw them away and you can't make profit on them. But if you've already claimed the $10 cost of goods on those jeans, that might be double dipping. But you may need to not claim them as cost of goods, and rather than that, claim them as a defect. Do you follow? Because you didn't sell them. So technically, if you threw them away, you didn't sell them. They're not a cost of goods anymore. They might be a defect. That is one I would absolutely double check with your professional who's going to do your taxes for you, right, guys? Just to be sure. There's some other things. Of course, you cannot claim off the cost of the entire cost of your cell phone or your cell phone bill, because we all use them for personal reasons as well. But if you use this per percentage of your business, which we do because we all have our apps on here, and if you use social media for business, if you have a YouTube channel or a business Instagram, you're using your phone part of the time for your business. So this is, again, something you can ask your professional CPA or your licensed CPA and your professional tax preparer. You can say to them, what can I claim on this? There's going to be like a certain percentage or whatever, and they'll know that. But bring it up. Ask them, what about my internet bill, my cell phone bill, my new laptop, my new phone? What percentage of that can I claim? It's probably going to depend on how much you use it for work versus business. Don't forget to claim your supplies. These are just as important as your cost of goods. Everyone buys supplies, everyone buys inventory. So it's something you want to definitely get your deduction for, that you're allowed. This includes any supplies you buy for your business. Bubble wrap and shipping supplies, obviously, but bins to store stuff in. If you buy pens, pads, papers, receipt books, anything like that, if it's specifically bought for your business, 100%, no personal use, it's for your business, it is a write-off. Don't forget to take those receipt books to places where you're going to be spending cash. There's no need to get every person on every yard that you go to purchase something at a yard sale to sign the book. Most receipt books have a place where you can just put what you bought and how much it cost. You can put at the top, neighborhood sale in Pittsburgh, yard sale on Maple Street, church sale at St. Joseph's. You don't have to put the exact address like of every house. You could just, if you hit 10 houses, neighborhood sale in Pittsburgh, you'll have 10 receipts for the 10 different houses. You don't have to get the person to sign it, but just make sure you're keeping track. Every time you go to a church sale, every time you go to a yard sale, neighborhood sale, a flea market, anything like that, take your little book, and each stop, each house, each church, each little stall at the flea market, make a new receipt in your receipt book. You can write, I bought 10 plush for $20. Then the next stop, you can write 12 pairs of jeans for $12. Just keep track of all of it. And this includes local too. So if you're purchasing items locally for resale and you're paying cash, make sure you're filling out those receipts because you want to claim that. Just because you're not getting an actual printed out receipt because you're at a yard sale, if you spend $100 on a Polaroid, you're going to sell it for $300. You only want to pay taxes on $200. You want that deduction because you paid for it. It's cost of goods. So make sure you guys have receipt books and you're keeping track of all your cash buys. And then don't forget the little places that you're spending money. List perfectly. GoDaddy, QuickBooks. We all remember our fees on our selling platforms and our subscription fees for our stores on eBay and things like that. But don't forget, if you use something like Sellhound, List Perfectly, GoDaddy, QuickBooks, if you have a website and you pay for that, if you have a domain name and you pay for that, if you have upgrades on Shopify that you pay for, anything like that that's for your business is a write-off. Make sure you keep good records. When you pay with your, here comes the train. When you pay with your credit card or your debit card to like GoDaddy, they'll send you a receipt in your email. You can just print that out and put it with your records. So those are some deductions that I think some folks are missing out on. And again, at the end of the year, you only want to pay taxes, or each quarter. You should be filing each quarter, I guess. But you only want to be paying taxes on the actual taxable income that you have made. You don't want to be giving the IRS any more money than you have to. So make sure you're getting any and all deductions that you are entitled to. Again, I cannot express this enough. I am not a professional. Make sure you talk to a CPA or a tax preparer. Ask them these questions. Sit down with them. Make a list before you call them or go see them. That's the best way to do it. Everything I've talked about today and anything else you think of, make a list and bring it with you to your appointment and say, these are the deductions I think I'm entitled to. Can you help? And they'll tell you yes, 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 no, yes, yes, no. They'll be able to tell you what you can and can't. And they may even know extra deductions that we don't. And that's another good reason why it's good to go see a professional. They usually will be able to help you out with that by finding deductions you didn't even know you were entitled to. And they will make sure that everything's on the up and up, that you're legally okay, and they will back up their filing. They usually give you some kind of warranty that if you're audited, they will take care of that for you, so you won't have to deal with the audit. They'll do everything for you. Again, I've never seen a CPA or a tax preparer that didn't have that guarantee, but make sure they have that guarantee that if something were to happen with your taxes, that they filed and prepared and filed for you, that they are going to back that up. But they'll be able to answer all these questions for you. All right, guys, let me know what you think down in the comments below. Hit the thumbs up before you leave. Subscribe to the channel if you haven't already. Don't forget to join our Facebook group, Flippin' Hippos Reseller Pod. That train is so loud. There's a link down below. Until next time, guys, go be productive. Go make some money. And as always, thank you so much for watching. You guys are the best. Bye.